Have you ever wondered what Dividend Kings are? Well, you're in the right place. Let's embark on a journey to understand these monarchs of the financial world. Dividend Kings aren't just any regular companies. They're the crème de la crème, the top tier, the elite. Imagine a company that's not only survived, but thrived, and consistently increased its dividends for 50 consecutive years. Yes, you heard it right, 50 years. That's what makes a company a Dividend King. It's like a badge of honor, a testament to their resilience, stability, and commitment to rewarding their shareholders. But let's break this down a bit. What are dividends? Simply put, they are payments made by corporations to their shareholders, usually in the form of cash. It's a way for companies to distribute a portion of their earnings back to the people who invested in them. So, when we talk about Dividend Kings, we're talking about companies that have not only paid dividends but have increased them year after year for over half a century. That's no small feat. It signals a company's strong financial health, reliable management, and a proven track record of performance. Only a handful of companies can claim this prestigious status. They are the royalty of the stock market, the stalwarts of consistency and growth. So, are you ready to dive into the world of Dividend Kings and see why they matter? Why should you care about Dividend Kings, you might ask? Well, let's delve into the reasons why these companies deserve your attention. Firstly, Dividend Kings offer an impressive level of stability. These are not your fly-by-night businesses. Instead, they are well-established, often multi-billion-dollar companies that have been around for decades, sometimes even over a century. This longevity provides a certain level of assurance that they're not going anywhere anytime soon. Now let's talk about growth. Dividend Kings have a demonstrated history of long-term growth, both in terms of their business operations and their dividends. This is no small feat, especially when you consider that they've managed to grow their dividends every year for at least 50 years through economic booms and busts, technological revolutions, and shifting consumer trends. This consistent growth can be a great source of compound returns for investors with a long-term perspective. But perhaps the most attractive feature of Dividend Kings is their ability to provide consistent income. In a world of low interest rates and uncertain economic times, the dividends paid out by these companies can serve as a stable source of income. This can be particularly beneficial during economic downturns when other sources of income may be less reliable. Furthermore, the fact that these companies have been able to maintain and increase their dividends for so many years is a testament to their financial strength and management's commitment to returning value to shareholders. In other words, these companies are not just paying dividends because they can. They're doing it because they have a durable business model and a disciplined approach to capital allocation. So, when you invest in a Dividend King, you're not just buying shares in a company. You're buying shares in a proven business model, a track record of stability and growth, and a consistent source of income. And in a world of uncertainty, these qualities should not be undervalued. Dividend Kings are not just companies. They are financial fortresses that have proven their resilience over time. What makes a company a Dividend King? Well, to achieve this royal status, companies must possess certain key characteristics. Let's delve into what these are. Firstly, Dividend Kings are known for their strong competitive advantages. They usually operate in industries where they have a unique edge, allowing them to outperform their competitors. This could be a proprietary technology, a powerful brand, or economies of scale. This competitive advantage provides a protective moat around their business, helping them maintain their profitability and therefore, their ability to pay dividends consistently. Secondly, solid management teams are a common trait among Dividend Kings. These are the people who steer the ship, making key decisions that affect the company's direction and profitability. A competent management team understands the company's industry, has a vision for the future, and knows how to navigate both calm and stormy economic seas. They're the ones ensuring the company remains profitable and continues rewarding its shareholders with steady dividends. The third characteristic is steady cash flows. A company can't pay dividends if it's not generating sufficient cash. Dividend Kings are typically companies with stable, predictable cash flows. They often operate in mature industries where demand for their products or services is consistent. This stability allows them to generate the cash needed to pay dividends year after year, decade after decade. But it's important to remember that these traits don't develop overnight. It takes years, often decades, for a company to build a strong competitive advantage, establish an effective management team, and develop a business that generates steady cash flows. And it's these solid foundations that allow them to ascend to the status of Dividend King. So, When you're looking at potential investments, consider these characteristics. Look for companies with strong competitive advantages, solid management teams, and steady cash flows. These are the companies that have the potential to become dividend kings, providing you with a steady stream of income for years to come. Dividend kings are not born overnight, they are built on solid foundations that stand the test of time. Can you name any dividend kings? Let's start with Coca-Cola, a name synonymous with refreshment and a global leader in the beverage industry. Over the years, Coca-Cola has exhibited an impressive ability to adapt and innovate, allowing them to continuously grow their dividends. They've expanded their product line beyond the classic cola, delving into healthier options like water, tea, and juice, and even coffee. This adaptability, coupled with their powerful brand and global distribution network, has enabled Coca-Cola to consistently increase dividends for over 5 decades. Next up, we have Johnson & Johnson, a powerhouse in the healthcare sector. Johnson & Johnson's diverse portfolio, spanning across pharmaceuticals, medical devices, and consumer health products, has been a key driver of its consistent dividend growth. The company's ability to generate steady revenue, regardless of economic conditions, is a testament to their robust business model and the essential nature of their products. With a dividend increase streak that spans over half a century, Johnson & Johnson is a shining example of a dividend king. Lastly, let's delve into Procter & Gamble, a giant in the consumer goods industry. From laundry detergent to toothpaste, Procter & Gamble's products have found their way into homes around the world. Their strategy of owning multiple leading brands across different segments has allowed them to maintain consistent sales and, consequently, consistent dividend growth. The company's commitment to innovation and understanding consumer needs has helped them remain on top and increase dividends for over 6 decades. These companies, while operating in vastly different industries, share some common threads. Each has a robust and adaptable business model, a strong brand presence, and a commitment to delivering value to shareholders. Their consistent dividend growth is a testament to their financial strength and the resilience of their businesses. These dividend kings are more than just household names, they are the epitome of financial stability and growth. Are dividend kings risk-free? That's the question we'll tackle in this segment. As we've learned, dividend kings are generally solid investments, but it's essential to remember that no investment is entirely without risk. Let's start with overvaluation. Dividend kings, by their very nature, are companies that have proven their resilience and growth over the long term. This consistent performance often leads to increased demand for their shares, driving up their stock prices. However, this popularity can sometimes inflate the stock's value beyond what the company's actual earnings justify, leading to overvaluation. Overvalued stocks pose a risk because they can potentially crash if the company fails to meet the high expectations set by the market. Another risk associated with dividend kings is the lack of diversification. Since dividend kings are few and far between, investors often pour a significant portion of their portfolio into these companies hoping for steady returns. This concentration can backfire if a dividend king encounters an unforeseen challenge or market downturn. A well-diversified portfolio, on the other hand, can help mitigate such risks by spreading investments across various sectors and asset classes. Even the most reliable dividend kings can face market fluctuations, regulatory changes, or unexpected business setbacks. Remember, past performance is not a guarantee of future results. Therefore, it's crucial to keep an eye on the financial health and market position of these companies, even after investing. Moreover, dividend kings are not immune to broader economic factors. For instance, during periods of high inflation, the real value of dividends can decrease. Similarly, during economic downturns, even the strongest companies may struggle, affecting their dividends and share prices. To sum up, while dividend kings offer a certain level of stability and continuous dividends, they are not entirely risk-free. Investors need to be aware of potential overvaluation, the dangers of a lack of diversification, and the impact of broader economic factors. Even the mightiest of kings can face challenges. The key is to understand these risks and make informed decisions. How can you become a part of this royal investment court? Well, it's easier than you might think. Investing in dividend kings, those companies with a proven track record of increasing dividends for at least 50 years, can be achieved in 2 main ways. The first way is by purchasing individual stocks. This approach allows you to handpick the dividend kings that align with your investment strategy and risk tolerance. You'll have the flexibility to decide how much you want to invest in each company and when you want to buy or sell. However, remember that investing in individual stocks requires a good understanding of each company's financial health and market position. So, be prepared to do some homework. The second way is through exchange-traded funds, or ETFs, which track Dividend Kings. ETFs are essentially a basket of stocks that include a variety of Dividend Kings, offering instant diversification. This can be a good option if you're new to investing or prefer a more hands-off approach. Some ETFs even focus specifically on Dividend Kings, allowing you to invest in this elite group with a single purchase. Whether you choose individual stocks or ETFs, consider the benefits of reinvesting your dividends. This is where the magic of compounding comes into play. When you reinvest your dividends, you're essentially using your earnings to buy more shares, which in turn can generate more dividends. Over time, this can significantly boost your returns, turning a modest initial investment into a sizable nest egg. Remember, investing is not about getting rich quick. It's about making strategic decisions that will help your money grow over the long term. And investing in Dividend Kings, companies that have demonstrated their reliability and stability over decades, can be a solid part of that strategy. Investing in Dividend Kings can be a royal road to wealth creation if done wisely. So are you ready to join the court? So, are Dividend Kings the crown jewels of your investment portfolio? Well, let's circle back and revisit what we've learned. Dividend Kings, as we now know, are those blue-chip companies that have consistently increased their dividends for at least 50 straight years. Their importance in an investment portfolio cannot be overstated. They offer a steady and growing income stream, which is a beacon of security in the often turbulent financial seas. We've explored the key characteristics that set Dividend Kings apart: financial stability, a strong history of performance, and a commitment to rewarding shareholders. We've walked through examples of these companies, such as Procter & Gamble, Coca-Cola, and Johnson & Johnson, each a testament to the power of consistent dividend growth. But remember, every silver lining has a cloud. We also delved into the risks associated with Dividend Kings. No investment is foolproof, and these companies, despite their impressive track records, are no exception. Economic downturns, changes in leadership, and market volatility can all pose challenges. Finally, we've discussed how to invest in Dividend Kings. The key, a long-term perspective. These are not stocks for quick flips or short-term gains. They are designed for investors who value stability and consistency over the roller coaster ride of high-risk, high-return investments. Remember, investing in Dividend Kings is not just about chasing dividends, it's about building a stable, long-term income stream.